Chapter 3, Structuring a Commercial Real Estate Fund, Laying the foundation for success. In the realm of commercial real estate, CRE, investment, the success of a venture often hinges on the foundation it is built upon. Chapter 3 is dedicated to exploring the intricate process of structuring a CRE fund, a pivotal step that dictates how your fund will operate, attract investors, and navigate the complexities of the market. As Crestview Capital Holdings embarks on this chapter, let's delve into the critical aspects that shape a well-structured fund. Understanding the significance. Structuring a CRE fund involves more than mere logistics. It's about strategic alignment, legal frameworks, fundraising prowess, and effective management. The choices made during this phase influence the fund's trajectory, investor relationships, and long-term viability. By comprehensively addressing these considerations, Crestview Capital Holdings can set the stage for a fund that thrives in an ever-evolving CRE landscape. Key components of fund structuring. 1. Legal structures. The legal entity you choose for your fund affects governance, taxation, and investor relations. Understanding the nuances of limited partnerships, limited liability companies, and other structures is crucial to crafting a solid foundation. 2. Investor relations. Building strong and transparent relationships with investors is paramount. A well-structured fund instills confidence and fosters trust, allowing for mutually beneficial partnerships. 3. Fundraising strategies. Effective fundraising requires a tailored approach. Understanding your target audience, crafting a compelling value proposition, and utilizing networking avenues are essential to attracting capital. 4. Management practices. Once established, your fund requires efficient management. From due diligence to investment decisions, having a well-defined process ensures informed choices. 5. Adaptability. The CRE market is fluid and subject to change. A well-structured fund accounts for market shifts and possesses the adaptability to seize opportunities and mitigate risks. Strategically navigating the process. Chapter 3 provides a roadmap to navigate the intricacies of fund structuring, encompassing legal, operational, and strategic considerations. Crestview Capital Holdings will gain insights into selecting the right legal structure, cultivating investor relationships, devising fundraising strategies, and adopting management practices that align with the fund's vision. As the chapter unfolds, Crestview Capital Holdings will uncover actionable insights and expert guidance on the art of crafting a well-structured CRE fund. By embracing these principles, the foundation for the fund's success will be firmly laid, setting the stage for a rewarding journey in the world of commercial real estate investment. Exploring Chapter 3, Structuring a Commercial Real Estate Fund, Insights and Expertise. Chapter 3 takes Crestview Capital Holdings on a comprehensive journey through the intricacies of structuring a commercial real estate, CRE, fund. As you delve into this chapter, you'll gain invaluable insights into the fundamental components that contribute to the success of your fund. Here's a glimpse of what you can expect to learn. 1. Legal structures and entity choices. Understand the importance of selecting the right legal structure for your fund. Explore various options, such as limited partnerships, limited liability companies, and corporations, and learn how each structure impacts governance, taxation, and investor relations. 2. Investor relations and trust building. Discover the critical role of investor relations in the CRE fund landscape. Learn strategies to build transparent and strong relationships with investors, fostering trust and alignment of interests. 3. Crafting effective fundraising strategies. Explore the art of fundraising tailored to your fund's unique attributes. Delve into strategies for attracting capital, presenting compelling value propositions, and leveraging networking avenues to secure investments. 4. Strategies for fund management. Uncover the key practices in managing a CRE fund effectively. Learn how to develop robust due diligence processes, make informed investment decisions, and optimize property management strategies for long-term success. 5. Adaptability and market dynamics. Recognize the importance of staying adaptable in a dynamic CRE market. Discover how to navigate market shifts, seize emerging opportunities, and mitigate risks through strategic adjustments. 6. Compliance and governance. Learn about the regulatory and compliance considerations inherent in fund structuring. Understand how effective governance ensures transparency, accountability, and adherence to legal requirements. 7. Tailoring investment criteria. Discover the significance of establishing clear investment criteria aligned with your fund's strategy. Learn how to refine and adjust these criteria to meet changing market conditions and investor preferences. 8. Maximizing long-term viability. Explore how a well-structured fund sets the foundation for long-term viability. Learn how thoughtful fund structuring fosters stability, resilience, and growth in a competitive CRE environment. 9. Balancing risk and return. Understand the delicate balance between risk and return in CRE fund structuring. Discover strategies to manage risk while optimizing potential returns for investors. 10. Case studies and real-world examples. Explore real-world examples and case studies that illustrate successful fund structuring practices. Learn from industry leaders who have effectively navigated the challenges and opportunities in the CRE sector. By delving into the insights and knowledge presented in this chapter, Crestview Capital Holdings will be well equipped to navigate the complex landscape of structuring a CRE fund. Each section provides actionable strategies, expert guidance, and practical advice to ensure that your fund is strategically positioned for success. Chapter 3, Crafting the Blueprint. Structuring a Commercial Real Estate Fund. Welcome to Chapter 3 of your journey with Crestview Capital Holdings, where we venture into the heart of fund structuring. In this chapter, you'll unravel the intricacies of designing the framework for your commercial real estate (CRE) fund, ensuring its alignment with your investment strategy and the aspirations of your investors. Creating a successful CRE fund requires a solid blueprint that balances investor needs, legal considerations, and strategic vision. In the pages ahead, you'll navigate the essential steps that culminate in a robust fund structure. From defining your fund's objectives to establishing legal frameworks, this chapter serves as your guide to laying the foundation for a thriving investment venture. Here's a glimpse of what you'll explore in this chapter. 1. Defining fund objectives. Understand the key objectives of your CRE fund, including investment focus, target market, and risk tolerance. Craft a clear mission statement that articulates your fund's purpose and guiding principles. 2. Choosing the legal structure. Explore various legal structures such as limited partnerships, limited liability companies, and corporations. Evaluate the pros and cons of each structure and select the one that aligns with your goals and investor preferences. 3. Crafting the fund documents. Work with legal experts to draft fund documents, including the private placement memorandum, PPM, operating agreements, and subscription documents. Ensure that fund documents reflect the fund's objectives, terms, and compliance with securities regulations. 4. Compliance and regulatory considerations. Navigate the regulatory landscape by ensuring compliance with securities laws and regulations. Address potential challenges and requirements to maintain a legally sound and transparent fund structure. 5. Defining investor terms. Determine the terms and conditions for investors, including minimum investment amounts, fee structures, and profit-sharing mechanisms. Craft investor-friendly terms that attract potential investors and build trust. 6. Establishing the fund timeline. Set a clear timeline for fund launch, capital deployment, property acquisition, and potential exit strategies. Develop a realistic schedule that aligns with market trends and investor expectations. 7. Building the investment team. Assemble a skilled and experienced team of professionals, including real estate experts, legal advisors, analysts, and administrative staff. Assign roles and responsibilities to ensure effective fund management and execution. 8. Preparing for fundraising. Develop a comprehensive fundraising strategy to attract investors. Craft compelling marketing materials and presentations that highlight your fund's value proposition. As you dive into the depths of structuring a CRE fund, remember that each decision you make contributes to the framework that supports your investment journey. Your careful consideration of fund objectives, legal structures, compliance measures, and investor terms will shape the path of Crestview Capital Holdings and define its unique identity in the CRE landscape. Let's embark on this exploration of fund structuring, setting the stage for the growth and success of your CRE fund. The pages ahead will empower you with the knowledge and insights needed to create a blueprint that stands as a testament to your commitment to excellence in commercial real estate investment, fund formation and legal structures, building the framework for success. In the dynamic world of commercial real estate, CRE, investment, the foundation of your venture lies in the careful structuring of your fund. Chapter 3 of our journey with Crestview Capital Holdings delves deep into the realm of fund formation and legal structures, providing you with insights and strategies to create a robust framework that supports your investment goals and aligns with regulatory requirements. Understanding fund formation. At the heart of fund formation is the deliberate process of crafting a strategy that outlines the objectives, structure, and operations of your CRE fund. This stage requires a comprehensive approach that encompasses legal, financial, and operational considerations. Your fund's success hinges on a well-thought-out plan that not only attracts investors but also sets the stage for efficient fund management. Exploring legal structures. Selecting the appropriate legal structure for your CRE fund is a pivotal decision that impacts various aspects of your operations, governance, and taxation. Common legal structures include limited partnerships, LPs, limited liability companies, LLCs, and corporations. Each structure comes with its own advantages and complexities, so it's crucial to evaluate how well they align with your fund's objectives and investor preferences. Crafting the fund documents, including the private placement memorandum, PPM, operating agreements, and subscription documents, form the backbone of your fund's legal framework. These documents provide essential information about the fund's investment strategy, terms, risk factors, and other pertinent details. Working closely with legal experts ensures that these documents are well drafted, compliant with regulations, and transparent to potential investors. Navigating compliance and regulatory considerations. Compliance with securities laws and regulations is paramount in establishing investor trust and avoiding legal issues. The regulatory landscape can be intricate, requiring you to navigate through federal and state regulations that govern securities offerings and investment activities. A sound legal foundation not only protects your fund but also instills confidence in your investors. Defining investor terms. Investor terms encompass various aspects, including the minimum investment amount, fee structures, and profit-sharing arrangements. These terms play a significant role in attracting investors and influencing their decision to commit capital to your fund. Striking a balance between investor-friendly terms and fund sustainability is crucial for long-term success. Building the investment team. Your fund's success depends on the expertise and dedication of your team. Assembling a skilled and well-rounded team, including real estate professionals, legal advisors, analysts, and administrative staff, is essential for effective fund management and execution. Assigning roles and responsibilities ensures that each team member contributes to the fund's objectives. As you venture into the realm of fund formation and legal structures, remember that a meticulously designed framework sets the stage for your CRE fund's journey. It shapes your identity, defines your operations, and determines how you interact with investors in the market. By comprehensively addressing these aspects, you'll pave the way for Crestview Capital Holdings to thrive in the competitive landscape of commercial real estate investment. Relevant examples, fund formation and legal structures. To solidify your understanding of fund formation and legal structures, let's delve into relevant examples that highlight how different choices can shape the direction and success of a commercial real estate (CRE) fund. Example 1, Limited Partnership, LP, structure for a value-add fund. Imagine you're founding a CRE fund focused on value-add opportunities, aiming to acquire underperforming properties and enhance their value. In this scenario, you opt for a limited partnership, LP, structure. Why LP? Since LPs offer flexibility, with a clear division between general partners, GPs, who manage the fund, and limited partners, LPs, who provide capital. Since GPs are responsible for day-to-day operations and decision-making, while LPs contribute capital and enjoy limited liability. Impact. Since GPs have a hands-on role in selecting properties and implementing value-add strategies. Since LPs benefit from potential returns while minimizing personal risk. Example 2, Limited Liability Company, LLC, structure for a multi-asset fund. Now, let's consider a scenario where you're launching a CRE fund that aims to diversify across multiple asset classes and geographic regions. Why LLC? Since LLCs combine the benefits of partnerships and corporations. Since members, equivalent to partners, have limited liability and can actively participate in management. Impact. Since members can have a voice in decision-making, enhancing collaboration. Since limited liability shields members' personal assets from fund liabilities. Example 3, Real Estate Investment Trust, REIT, structure for a public fund. Suppose you're planning to launch a publicly traded CRE fund to provide retail investors with exposure to the real estate market. Why REIT? Since REITs offer a vehicle for investing in real estate through the stock market. Since they provide liquidity, as shares can be bought and sold on public exchanges. Impact. Since retail investors can access real estate investments without direct property ownership. Since REITs are subject to specific regulations, such as distributing a significant portion of earnings to shareholders. These examples demonstrate how different legal structures align with specific fund objectives. The choice of structure influences matters such as investor involvement, liability, tax implications, and regulatory requirements. As you tailor your fund structure, carefully consider your goals, investor preferences, and the regulatory environment to create a framework that optimally supports Crestview Capital Holdings' mission. Remember that these examples illustrate just a fraction of the possibilities. Your fund's success will hinge on aligning your chosen legal structure with your unique investment strategy, market trends, and investor expectations. Exploring fund formation and legal structures. In the realm of commercial real estate, CRE, investment, the journey to establishing a successful fund begins with a thorough understanding of fund formation and the selection of the appropriate legal structure. This chapter unveils the critical aspects of structuring your CRE fund, offering insights into how your decisions can shape the course of Crestview Capital Holdings' growth. Fund formation, laying the blueprint. Fund formation entails the meticulous process of designing a strategic blueprint that outlines the purpose, objectives, and operational framework of your CRE fund. This blueprint serves as a guide for investors, defining how the fund will operate, deploy capital, and achieve its financial goals. Fund formation encompasses key considerations such as 1. Investment strategy. Define your fund's investment focus, whether it's core, value add, opportunistic, or a mix of strategies. This lays the foundation for your fund's mission and guides decision-making. 2. Market segmentation. Identify your target market, whether it's high net worth individuals, institutional investors, or retail investors. Understanding your audience helps tailor your fund's offerings. 3. Risk tolerance. Assess the level of risk your fund is willing to take on. This informs your investment decisions and guides the selection of properties and strategies. 4. Mission statement. Craft a clear and concise mission statement that communicates your fund's purpose, values, and commitment to investors. Choosing the right legal structure. Selecting the appropriate legal structure is a pivotal decision that shapes how your fund will operate, how investors will be involved, and how taxation will be handled. Common legal structures include: 1. Limited partnerships, LPs. LPs consist of general partners, GPs, who manage the fund, and limited partners, LPs, who provide capital. LPs offer liability protection for LPs and active management for GPs. 2. Limited liability companies, LLCs. LLCs combine the flexibility of partnerships with limited liability protection. Members can actively participate in management and benefit from liability shields. 3. Corporations. Corporations are separate legal entities that issue shares to investors. They offer a clear governance structure but may involve complex regulations. 4. Real estate investment trusts, REITs. REITs are publicly traded entities that invest in real estate. They offer diversification and liquidity but are subject to specific regulations. Navigating compliance and documentation. Creating a legally sound CRE fund involves drafting essential fund documents, such as the Private Placement Memorandum, PPM, operating agreements, and subscription documents. These documents provide transparency to investors, outlining fund terms, objectives, and risk factors. They also ensure compliance with securities laws and regulations. In summary, fund formation and legal structuring are the cornerstones of a successful CRE fund. The choices you make in terms of investment strategy, target audience, legal structure, and compliance measures set the stage for Crestview Capital Holdings' trajectory. As you navigate these intricacies, remember that each decision contributes to the unique identity and success of your fund in the competitive CRE landscape. Actionable advice: navigating fund formation and legal structures. Embarking on the journey of establishing a commercial real estate CRE fund involves careful considerations in fund formation and selecting the right legal structure. These actions will shape the course of Crestview Capital Holdings and influence its success. Here's a guide to help you navigate this critical phase. 1. Define your investment strategy clearly. Understand the types of CRE properties you want to invest in, for example, office, retail, residential. Determine your investment approach, core, value add, opportunistic, and tailor it to match your expertise and market trends. 2. Know your target audience. Identify your ideal investors based on their risk tolerance, investment goals, and financial capacity. Craft a strategy to attract and engage these investors by aligning your fund's objectives with their preferences. 3. Evaluate legal structures cautiously. Research the legal structures, LPs, LLCs, corporations, REITs, and weigh their advantages and disadvantages. Choose a structure that aligns with your fund's objectives, investor needs, and tax considerations. 4. Seek legal expertise. Engage legal professionals with expertise in real estate and investment fund law. Collaborate to draft comprehensive fund documents, PPM, operating agreements, that adhere to securities regulations. 5. Focus on compliance and transparency. Prioritize transparency in your fund documents to build trust with investors. Ensure your fund adheres to all applicable securities laws and regulations to avoid legal pitfalls. 6. Tailor investor terms. Carefully design investor terms, including minimum investments, fees, profit sharing, and exit strategies. Strive for investor-friendly terms that promote alignment of interest and foster long-term partnerships. 7. Build a strong team. Assemble a skilled and diverse team with expertise in real estate, finance, legal, and operations. Assign roles and responsibilities clearly to ensure effective fund management and execution. 8. Plan for investor communication. Develop a robust investor communication strategy to keep stakeholders informed and engaged. Maintain regular updates on fund performance, market trends, and investment opportunities. 9. Stay adaptable. Remain open to adapting your fund structure and strategy based on market shifts and investor feedback. Flexibility can position your fund for success in changing market conditions. 10. Embrace continuous learning. Stay informed about evolving securities laws, industry trends, and best practices. Continuous education empowers you to make informed decisions and navigate regulatory changes effectively. Remember, The decisions you make during fund formation and legal structuring are pivotal in shaping the trajectory of Crestview Capital Holdings. By following this actionable advice, you'll build a strong foundation that supports your fund's growth, investor relations, and long-term success in the competitive world of commercial real estate investment. Fundraising strategies and investor relations, nurturing growth and partnerships. Chapter 4 of our journey with Crestview Capital Holdings takes us into the realm of fundraising strategies and investor relations, a pivotal phase that sets the stage for your commercial real estate (CRE) fund's success. This chapter unveils the art of attracting capital, forging investor partnerships, and cultivating lasting relationships that propel your fund to new heights. Mastering fundraising strategies. Successful fundraising is an art that requires a strategic approach tailored to your fund's unique value proposition. Here, you'll uncover various fundraising strategies that can help you secure the capital needed to execute your investment plans. From high net worth individuals to institutional investors, each group has distinct preferences, risk profiles, and investment horizons. Crafting compelling fundraising strategies involves 1. Defining your pitch. Develop a concise yet powerful pitch that highlights your CRE fund's investment strategy, potential returns, and competitive advantages. Tailor your message to resonate with your target investors. 2. Leveraging your network. Tap into your existing network of industry contacts, peers, mentors, and professionals to spread the word about your fund. Personal connections can be a valuable source of introductions and referrals. 3. Industry outreach. Attend industry events, conferences, and seminars to network with potential investors. These gatherings provide opportunities to showcase your fund's expertise and build rapport with potential backers. 4. Utilizing online platforms. Leverage online platforms, social media, and crowdfunding platforms to reach a wider audience and attract investors who align with your fund's mission. Nurturing investor relations. Building strong and lasting relationships with investors is a cornerstone of fund success. Effective investor relations involve ongoing communication, transparency, and demonstrating your commitment to achieving their investment objectives. Key steps in cultivating meaningful investor relations include 1. Transparent communication. Keep investors informed about fund performance, market insights, and developments. Maintain an open line of communication to build trust and foster confidence. 2. Regular updates. Provide regular updates through newsletters, reports, and meetings. These updates keep investors engaged and informed about the progress of their investments. 3. Periodic meetings. Organize periodic investor meetings to discuss fund performance, strategy adjustments, and future opportunities. These interactions enhance transparency and provide a platform for addressing questions. 4. Addressing concerns. Be responsive to investor concerns and questions. Transparency in addressing challenges and risks demonstrates your commitment to investor interests. As you navigate the realm of fundraising and investor relations, remember that each interaction shapes the perception of Crestview Capital Holdings. By crafting effective fundraising strategies and nurturing investor relationships, you'll lay the groundwork for a successful and enduring CRE fund. Your ability to attract and retain investors not only fuels your fund's growth but also cements its position as a trusted player in the competitive world of commercial real estate investment. Relevant examples, fundraising strategies and investor relations. To illustrate the principles of effective fundraising strategies and investor relations, let's delve into relevant examples that showcase how different approaches can shape the success of your commercial real estate CRE fund. Crestview Capital Holdings. Example 1. High net worth individual engagement. Imagine you're targeting high net worth individuals, HNWIs, who seek diversified investment opportunities. Your strategy involves personalized engagement and exclusive access to high potential CRE deals. Fundraising strategy. You leverage your personal network, reaching out to HNWIs who are acquaintances or referrals. You host intimate investment dinners where you present compelling opportunities. Your pitch emphasizes the potential returns and the exclusivity of being part of a select group of investors. Investor relations. You establish a dedicated investor relations team to provide personalized attention. Regular updates are sent, showcasing the progress of the properties in your portfolio. You also organize exclusive property tours, allowing investors to witness the transformation firsthand. Example 2. Institutional investor attraction. Consider a scenario where you're targeting institutional investors such as pension funds or endowments. These investors are focused on stable, long-term returns. Fundraising strategy. You conduct extensive market research to identify institutional investors aligned with your fund's strategy. You attend industry conferences and seminars, delivering presentations that highlight your fund's track record and conservative investment approach. Investor relations. You hold quarterly webinars where you provide in-depth market analyses and insights. These sessions demonstrate your fund's expertise and help institutional investors make informed decisions. Additionally, You provide comprehensive reports that align with their due diligence requirements. Example 3. Crowdfunding for retail investors. Suppose you're exploring crowdfunding to attract retail investors who are interested in CRE but lack significant capital. Fundraising strategy. You create an online crowdfunding campaign that showcases the fund's approach, potential returns, and impact on the local community. Your strategy focuses on storytelling to resonate with retail investors who value transparency. Investor relations. You engage with investors through social media platforms and regular newsletters. You emphasize community engagement by sharing updates on property renovations and local partnerships. Additionally, you host virtual town hall meetings where investors can ask questions and provide feedback. These examples demonstrate how tailoring your fundraising strategies and investor relations approaches can yield different outcomes based on your target audience. By aligning your efforts with the preferences and objectives of potential investors, you enhance your chances of building a robust investor base and establishing lasting relationships. Keep in mind that a thoughtful approach to both fundraising and investor relations will contribute to Crestview Capital Holdings' reputation and success in the CRE investment landscape. Exploring fundraising strategies and investor relations. In the realm of commercial real estate, CRE, investment, fundraising strategies and investor relations are essential components that can shape the trajectory of your fund's success. This chapter delves into the intricacies of effectively attracting capital and nurturing strong relationships with investors, uncovering the principles and practices that drive Crestview Capital Holdings forward. Fundraising strategies. The art of capital attraction. Fundraising strategies are the blueprints that guide your efforts to secure the capital needed for your CRE ventures. Whether targeting high net worth individuals, institutional investors, or retail backers, your approach should align with your fund's objectives and resonate with the preferences of your target audience. Key elements of successful fundraising strategies include: 1. Target audience identification. Understand your ideal investors' characteristics, risk profiles, and investment goals. Tailor your strategies to appeal to their specific needs and preferences. 2. Pitch development. Craft a compelling investment pitch that succinctly communicates your fund's value proposition, investment strategy, and potential returns. Highlight what sets Crestview Capital Holdings apart from the competition. 3. Network utilization. Leverage your professional network and industry connections to spread the word about your fund. Personal referrals and introductions can be invaluable in establishing initial investor interest. 4. Diversified approach. Combine traditional methods with modern approaches, such as social media and crowdfunding platforms, to reach a wider range of potential investors. Investor relations. Fostering long-term partnerships. Investor relations go beyond securing capital. They involve cultivating lasting partnerships built on transparency, communication, and trust. Nurturing these relationships enhances investor loyalty, ensures continued support, and fosters a sense of shared commitment. Essential elements of effective investor relations include: 1. Transparent communication. Establish a clear line of communication with investors, providing regular updates on fund performance, market insights, and relevant developments. 2. Consistent updates. Send newsletters, reports, and personalized communications that keep investors informed about the progress of their investments and the fund's overall performance. 3. Accessibility. Create opportunities for investors to engage with you through webinars, virtual meetings, and in-person events. Address their questions and concerns promptly and comprehensively. 4. Educational content. Share informative content about the CRE market, investment trends, and insights that demonstrate your fund's expertise and commitment to investor success. In summary, fundraising strategies and investor relations are pivotal in shaping the narrative of Crestview Capital Holdings. Effective strategies attract the right investors, while thoughtful investor relations foster loyalty and trust. By aligning your efforts with the needs and preferences of your investors, you create a foundation for enduring success in the dynamic landscape of CRE investment. Actionable advice: elevating fundraising strategies and investor relations. Mastering the art of fundraising strategies and investor relations is a dynamic process that can transform Crestview Capital Holdings into a trusted name in the commercial real estate, CRE, investment landscape. Follow these actionable steps to craft compelling strategies and establish meaningful relationships with investors. 1. Know your audience. Research your target investors' preferences, risk appetite, and investment goals. Tailor your messaging and offerings to resonate with their unique needs. 2. Craft an irresistible pitch. Develop a concise and impactful pitch that communicates your fund's value proposition. Highlight your CRE expertise, investment strategy, and potential returns. 3. Leverage your network. Tap into your personal and professional network for introductions and referrals. Engage industry contacts to spread the word about Crestview Capital Holdings. 4. Diversify fundraising channels. ASINs embrace traditional methods like in-person meetings and industry events. ASINs explore modern avenues such as crowdfunding platforms and social media campaigns. 5. Develop personal relationships. ASINs build rapport with potential investors through personalized interactions. ASINs showcase your passion for CRE and your commitment to investor success. 6. Prioritize transparency. ASINs establish a culture of openness by providing clear and honest information. ASINs address investor questions and concerns promptly to build trust. 7. Provide regular updates. ASINs deliver consistent updates on fund performance, property acquisitions, and market trends. ASINs use newsletters, reports, and webinars to keep investors informed. 8. Offer exclusive insights. ASINs provide value by sharing educational content about the CRE market and investment strategies. ASINs position yourself as a knowledgeable partner in investors' wealth-building journey. 9. Be accessible. ASINs create opportunities for investors to engage with you through virtual meetings or events. ASINs foster a two-way communication channel for feedback and suggestions. 10. Showcase your track record. ASINs highlight any previous successful projects or relevant experience. ASINs demonstrating a history of delivering results can instill confidence in potential investors. 11. Listen and adapt. ASINs pay attention to investor feedback and adapt your strategies accordingly. ASINs continuous improvement based on investor input enhances their satisfaction. 12. Stay committed to long-term relationships. ASINs foster enduring partnerships beyond the initial investment stage. ASINs show dedication to helping investors achieve their financial goals. By incorporating these actionable steps into your fundraising strategies and investor relations efforts, you'll create a solid foundation for Crestview Capital Holdings. Remember, the key is to genuinely care about your investor success, providing them with exceptional value and establishing the reputation as a credible and trustworthy player in the CRE investment arena. Management and governance of real estate funds. Guiding success with expertise. In Chapter 5, we delve into the crucial realm of managing and governing commercial real estate, CRE, funds, an endeavor that requires a blend of strategic leadership, operational efficiency, and meticulous governance. This chapter uncovers the intricacies of effective fund management, the role of your team, and the strategies that will propel Crestview Capital Holdings towards sustained growth. Mastering fund management. Effective fund management is the cornerstone of your CRE fund success. It involves overseeing various operational aspects, making informed investment decisions, and ensuring alignment with your fund's objectives. Key elements of masterful fund management include: 1. Investment decision-making. Utilize your investment strategy to identify, evaluate, and select properties that align with your fund's goals. Thorough due diligence, financial analysis, and risk assessment are integral to informed decisions. 2. Asset management. Implement strategies to enhance property value, optimize rental income, and ensure property maintenance. Effective property management strengthens your fund's performance. 3. Risk management. Develop risk mitigation strategies to navigate challenges such as market fluctuations, tenant turnover, and unexpected events. A proactive approach minimizes potential setbacks. 4. Portfolio diversification. Maintain a diverse portfolio that balances risk and return. Diversification across property types and geographic locations reduces vulnerability to market fluctuations. Building a high-performing team. A skilled and cohesive team is a cornerstone of successful fund management. Assemble professionals with expertise in real estate, finance, legal matters, and operations. Key factors in building your team include: 1. Roles and responsibilities. Define clear roles and responsibilities for each team member, ensuring everyone understands their contribution to the fund's success. 2. Collaboration. Foster a culture of collaboration where team members work together seamlessly. Regular communication and mutual respect enhance teamwork. 3. Expertise. Surround yourself with professionals who bring diverse skills and experience to the table. Their collective expertise strengthens your fund's decision-making capabilities. Governance and accountability. Effective governance structures provide a framework for transparent and ethical fund operations. Key aspects of governance and accountability include: 1. Board of Directors/Advisors. Consider establishing a board of directors or advisors to provide oversight, strategic guidance, and an external perspective. 2. Ethical standards. Establish ethical guidelines that guide your fund's conduct, ensuring fairness, transparency, and compliance with industry regulations. 3. Reporting and transparency. Regularly report fund performance, financials, and key developments to investors. Transparency fosters trust and demonstrates your commitment to accountability. In essence, effective management and governance strategies are the foundation upon which Crestview Capital Holdings thrives. By mastering the art of fund management, building a strong team, and implementing robust governance practices, you establish a solid framework for sustained growth, risk mitigation, and the fulfillment of your fund's objectives. Relevant examples: Management and Governance of Real Estate Funds. To illustrate the principles of effective management and governance of commercial real estate, CRE, funds, let's delve into relevant examples that showcase how different approaches can impact the success of Crestview Capital Holdings. Example 1. Strategic Asset Management. Imagine you're managing a CRE fund that focuses on value-add properties. One of your properties, a retail center, experiences declining occupancy rates due to changing consumer trends. Management approach. You conduct a thorough analysis of the market and identify the need to reposition the retail center. You collaborate with a seasoned property manager and implement strategies to attract new tenants, renovate common areas, and enhance the overall tenant experience. Result: your proactive asset management approach leads to increased occupancy rates, higher rental income, and improved tenant satisfaction. The property's value appreciates, positively impacting the fund's overall performance. Example 2. Effective team collaboration. Consider a scenario where your fund is investing in a mixed-use development project that includes residential, commercial, and office spaces. Team collaboration. You assemble a cross-functional team that includes real estate professionals, architects, project managers, and legal advisors. Regular team meetings ensure alignment, proactive problem solving, and efficient project execution. Result: the project progresses smoothly, and potential roadblocks are identified and resolved promptly. Effective team collaboration results in timely project delivery, minimized cost overruns, and a successful development that adds value to your fund. Example 3. Robust governance practices. Suppose your fund has grown significantly, attracting attention from institutional investors seeking transparency and strong governance. Governance enhancement. You establish a board of advisors composed of industry experts, legal professionals, and financial experts. Regular board meetings are held to review fund performance, investment decisions, and compliance with ethical guidelines. Result: institutional investors appreciate the transparent governance structure, which enhances their confidence in the fund's operations. Your commitment to accountability and ethical standards contributes to long-term investor loyalty. These examples showcase how effective management and governance strategies can drive positive outcomes for Crestview Capital Holdings. By combining strategic asset management, team collaboration, and robust governance practices, you create a foundation for sustained growth, risk mitigation, and investor satisfaction. Exploring management and governance of real estate funds. Chapter 5 delves into the intricacies of managing and governing commercial real estate, CRE, funds. Effective management and governance are essential for optimizing fund performance, minimizing risks, and building trust among investors. This chapter uncovers the key concepts and practices that drive Crestview Capital Holdings' success in the competitive world of CRE investment. Mastering fund management. Effective fund management involves overseeing the operational aspects of your CRE fund to achieve its financial and strategic objectives. This encompasses various stages, from property acquisition to ongoing asset management. Core elements of successful fund management include: 1. Investment strategy implementation. Execute your fund's investment strategy by selecting properties aligned with your goals, risk tolerance, and target returns. 2. Asset management. Implement strategies to enhance property value, optimize rental income, and address property-related challenges proactively. 3. Risk management. Develop strategies to mitigate risks associated with market fluctuations, tenant turnover, regulatory changes, and unexpected events. 4. Portfolio diversification. Build a diversified portfolio across property types and geographic locations to reduce exposure to single-point risks. Building a high-performing team. The strength of your team plays a crucial role in effective fund management. Assemble professionals with diverse expertise who collaborate seamlessly to achieve the fund's objectives. Key considerations when building your team include: 1. Roles and responsibilities. Clearly define roles and responsibilities to avoid overlap and ensure accountability for each team member. 2. Collaboration. Foster a culture of collaboration, open communication, and mutual respect among team members. 3. Expertise. Hire professionals with relevant experience in real estate, finance, law, and property management to cover all aspects of fund operations. Governance and accountability. Governance involves establishing structures, guidelines, and ethical standards to ensure transparent and ethical fund operations. Key elements of effective governance and accountability include: 1. Board of Advisors/Directors. Consider forming a board of advisors or directors to provide oversight, strategic guidance, and an external perspective on fund operations. 2. Ethical standards. Set ethical guidelines and principles that guide the conduct of the fund's operations, promoting transparency and fairness. 3. Investor reporting. Provide regular and comprehensive reporting to investors on fund performance, financials, and key developments. In essence, Effective management and governance practices provide the bedrock upon which Crestview Capital Holdings thrives. By skillfully managing your fund's operations, building a capable team, and adhering to robust governance principles, you create a framework for consistent growth, risk mitigation, and investor confidence. Actionable advice: navigating management and governance of real estate funds. Effectively managing and governing a commercial real estate (CRE) fund requires a combination of strategic foresight, operational excellence, and transparent governance. By implementing actionable steps, Crestview Capital Holdings can ensure optimal fund performance, minimize risks, and foster investor trust. 1. Craft a comprehensive strategy. Develop a clear investment strategy that aligns with your fund's objectives, risk tolerance, and target returns. Consider diversification across property types and geographic regions to mitigate risk and optimize returns. 2. Assemble a cohesive team. Build a team with complementary skills, including real estate experts, financial professionals, legal advisors, and property managers. Foster a collaborative work environment that encourages open communication and shared goals. 3. Empower asset management. Implement effective property management strategies to enhance property value and optimize rental income. Regularly assess market trends and tenant needs to proactively address challenges and seize opportunities. 4. Mitigate risks strategically. Develop a risk management plan that identifies potential challenges and outlines strategies to mitigate them. Stay updated on industry trends and regulatory changes to adapt your approach accordingly. 5. Establish ethical governance. Create an ethical framework that guides the fund's conduct, promoting transparency, fairness, and compliance. Consider forming a board of advisors or directors to provide oversight and strategic guidance. 6. Prioritize investor reporting. Provide regular and transparent reports to investors, showcasing fund performance, financials, and developments. Address any investor concerns promptly and comprehensively to maintain their confidence. 7. Implement technology solutions. Leverage technology tools for efficient data management, reporting, and communication with investors. Automation can streamline processes and enhance investor experience. 8. Monitor and adapt. Regularly review fund performance against targets and assess the effectiveness of your strategies. Be willing to adapt your approach based on market conditions and investor feedback. 9. Foster a culture of compliance. Ensure adherence to regulatory requirements and industry standards in all fund operations. Regularly review and update compliance protocols to stay current with changing regulations. 10. Continuous education. Stay informed about industry trends, best practices, and emerging technologies in fund management. Invest in ongoing professional development for your team to enhance their skills and knowledge. By integrating these actionable steps into your approach to fund management and governance, Crestview Capital Holdings can navigate the complex CRE landscape with confidence. A strategic combination of effective management, a cohesive team, transparent governance, and adaptability will contribute to long-term success and investor satisfaction. Navigating due diligence and investment criteria. Paving the path to informed decisions. Chapter 6 delves into the vital aspects of due diligence and investment criteria within commercial real estate, CRE, fund management. By understanding these processes and setting clear criteria, Crestview Capital Holdings can confidently identify lucrative investment opportunities while mitigating potential risks. Understanding due diligence. Due diligence is a comprehensive investigation and analysis conducted before making investment decisions. It involves assessing various factors that impact the potential success of an investment. Key components of due diligence include: 1. Financial analysis. Scrutinize historical and projected financials of the property, including income, expenses, and cash flows. Evaluate potential returns and risks. 2. Market research. Investigate local market trends, demand, and supply dynamics. Analyze factors such as rental rates, vacancy rates, and market growth potential. 3. Property condition assessment. Inspect the physical condition of the property, identifying any structural issues or necessary repairs. 4. Legal and regulatory review. Ensure the property complies with zoning laws, environmental regulations, and other legal requirements. 5. Tenant analysis. Evaluate tenant leases, creditworthiness, and lease terms. Understand the tenant mix and the potential for lease renewals. Setting investment criteria. Clear and well-defined investment criteria are essential to guide your fund's investment decisions. These criteria align with your fund's strategy and objectives, helping you focus on opportunities that meet your goals. Key elements of effective investment criteria include: 1. Property type. Specify the types of properties your fund is interested in, such as office buildings, retail centers, or industrial warehouses. 2. Geographic focus. Define the target geographic regions where you aim to invest, considering factors like market growth and economic stability. 3. Risk tolerance. Determine the level of risk your fund is willing to accept based on your investor profile and financial goals. 4. Return expectations. Set clear expectations for target returns on investment, factoring in factors such as rental income, appreciation, and exit strategies. 5. Hold period. Define the intended duration of investment for each property, aligning with your fund's short-term or long-term goals. Applying due diligence and investment criteria. Integrate these practices into your investment decision-making process to make informed choices that align with Crestview Capital Holdings' objectives. 1. Thorough analysis. Conduct comprehensive due diligence on potential properties, leveraging financial models, market research, and property inspections. 2. Filtering opportunities. Use your investment criteria to filter and prioritize opportunities, focusing on those that align with your fund's strategy. 3. Risk mitigation. Evaluate risks associated with each property and assess whether they align with your fund's risk tolerance. 4. Continuous review. Regularly update and refine your investment criteria to adapt to changing market conditions and fund goals. In essence, due diligence and investment criteria form the bedrock of informed decision-making within CRE fund management. By conducting thorough due diligence and setting clear investment criteria, Crestview Capital Holdings can confidently select properties that enhance its portfolio's performance and align with its strategic objectives. Relevant examples, illustrating due diligence and investment criteria. To provide practical insight into the concepts of due diligence and investment criteria, let's explore relevant examples that highlight their significance in commercial real estate, CRE, fund management for Crestview Capital Holdings. Example 1. Due diligence in action. Imagine your fund is considering the acquisition of an office building in a bustling downtown area. Due diligence process. You conduct thorough due diligence, which involves financial analysis, market research, property inspections, and legal reviews. The financial analysis reveals consistent rental income and healthy cash flows. Market research indicates increasing demand for office spaces in the area. Property inspections identify minor maintenance requirements. Legal reviews confirm compliance with zoning laws and environmental regulations. Decision outcome. Based on the positive due diligence findings, you proceed with the acquisition. The thorough investigation has provided confidence that the investment aligns with your fund's objectives and minimizes potential risks. Example 2. Investment criteria in action. Consider a scenario where your fund is focusing on value-add properties in suburban locations. Investment criteria. Your investment criteria specify a focus on retail centers in suburban areas with strong population growth and limited competition. The properties must have the potential for rental income enhancement through renovations or tenant mix adjustments. Property opportunity. You come across two potential properties, a retail center in a suburban neighborhood with a growing population and an older retail center in a saturated market. While both properties meet certain criteria, the first one aligns more closely with your investment strategy due to its growth potential and the absence of direct competitors. These examples demonstrate how due diligence and investment criteria shape your investment decisions. By conducting comprehensive due diligence and adhering to well-defined investment criteria, Crestview Capital Holdings can ensure that its investment choices are well-informed, aligned with its strategy, and poised to yield optimal returns. Exploring due diligence and investment criteria. Informed decision-making in CRE fund management. In the realm of commercial real estate, CRE, fund management, due diligence and investment criteria are fundamental practices that guide sound decision-making. Chapter 6 delves into these crucial concepts, emphasizing their significance in identifying valuable investment opportunities while minimizing potential risks. Understanding due diligence. Due diligence is a comprehensive and systematic process of investigation and analysis that precedes investment decisions. This rigorous examination involves evaluating various aspects of a potential property, enabling informed choices. Key components of due diligence include: 1. Financial analysis. Scrutinize the property's financial performance, including historical and projected income, expenses, and cash flows. Assess the potential returns and risks associated with the investment. 2. Market research. Investigate the local market dynamics, analyzing factors such as demand, supply, rental rates, and growth prospects. Understanding market trends is critical in gauging the property's future performance. 3. Property inspection. Conduct a thorough physical examination of the property to identify any structural issues, maintenance requirements, or potential hazards. 4. Legal and regulatory review. Ensure compliance with legal requirements, zoning laws, environmental regulations, and other legal aspects that could impact the property's viability. 5. Tenant analysis. Evaluate the quality of existing tenants, lease terms, tenant mix, and creditworthiness. Understanding tenant stability and lease structures contributes to accurate assessments. Unveiling investment criteria. Investment criteria provide a structured framework for selecting properties that align with your fund's strategy, goals, and risk tolerance. Well-defined investment criteria serve as guiding principles, enabling you to focus on opportunities that match your objectives. Key components of effective investment criteria encompass: 1. Property type. Specify the types of properties that suit your fund's strategy, such as office buildings, retail centers, industrial facilities, or mixed-use developments. 2. Geographic focus. Define the geographic regions where you intend to invest, considering factors such as market growth, economic stability, and location-specific dynamics. 3. Risk appetite. Determine the level of risk your fund is willing to undertake, aligning with your investor profile and financial goals. 4. Return expectations. Establish clear expectations for the desired returns on investment, factoring in rental income, appreciation, and potential exit strategies. 5. Hold period. Define the intended duration of ownership for each property, ensuring alignment with your fund's overall investment strategy. Incorporating due diligence and investment criteria. By integrating due diligence and investment criteria into your CRE fund management approach, Crestview Capital Holdings can effectively navigate the complex landscape of investment decisions. Thorough due diligence ensures that each investment is thoroughly assessed, while investment criteria serve as guardrails, ensuring that your fund's choices are strategic, informed, and aligned with its objectives. These practices collectively empower you to make sound decisions that maximize returns and mitigate potential risks. Actionable advice: enhancing due diligence and investment criteria. In the pursuit of successful commercial real estate, CRE, fund management, due diligence and well-defined investment criteria play a pivotal role. By implementing actionable strategies, Crestview Capital Holdings can make informed investment decisions that align with its goals while minimizing risks. 1. Conduct comprehensive due diligence. A sense checklist approach. Create a comprehensive due diligence checklist that covers financial, market, legal, property condition, and tenant analysis aspects. A sense expert consultation. Engage industry experts, such as real estate professionals, legal advisors, and property inspectors, to ensure thorough evaluation. 2. Leverage technology. A sense data management. Utilize data management and analysis tools to streamline due diligence processes, ensuring accurate insights. A sense property insights. Leverage technology for property insights, market trends, and financial analysis. 3. Analyze market trends. A sense local market dynamics. Continuously monitor local market trends to understand demand, supply, rental rates, and potential opportunities. A sense economic indicators. Keep an eye on economic indicators that might impact the CRE market, enabling timely adjustments to your investment strategy. 4. Develop clear investment criteria. A sense tailor criteria. Customize your investment criteria to align with Crestview Capital Holdings' specific goals, risk appetite, and investor preferences. A sense regular review. Periodically review and refine your investment criteria to adapt to changing market conditions and fund objectives. 5. Collaborate with professionals. A sense legal and financial advisors. Collaborate with legal and financial experts to ensure compliance, risk mitigation, and financial viability of investments. A sense industry insights. Seek advice from experienced professionals who have deep industry insights and can provide valuable perspectives. 6. Validate assumptions. A sense rigorous financial modeling. Develop robust financial models to validate assumptions about returns, expenses, and potential cash flows. A sense scenario analysis. Perform scenario analysis to assess how different market conditions may impact investment outcomes. 7. Balance risk and return. A sense risk assessment. Evaluate the risks associated with each investment opportunity and ensure they align with your fund's risk tolerance. A sense risk mitigation. Develop strategies to mitigate potential risks, enhancing the overall stability of your portfolio. 8. Maintain transparency. A sense investor communication. Maintain open and transparent communication with investors about the due diligence process, outcomes, and how investment criteria are being met. A sense investor feedback. Incorporate investor feedback into your due diligence and investment criteria refinement. 9. Learn from past experiences. A sense post-investment analysis. Conduct post-investment analysis to evaluate the accuracy of assumptions made during due diligence. I sense iterative learning. Continuously learn from both successful and challenging investments to refine your due diligence and criteria setting processes. By adopting these actionable strategies, Crestview Capital Holdings can ensure that its due diligence processes are rigorous, investment criteria are well-defined, and investment decisions are strategic and informed. These practices collectively contribute to enhancing the success of its CRE fund management endeavors. Conclusion. Paving the path to effective fund structuring. Chapter 3 has delved into the intricate realm of structuring a commercial real estate (CRE) fund, providing insights into key considerations, legal structures, fundraising strategies, investor relations, and management practices. As Crestview Capital Holdings concludes this chapter, it's crucial to recognize the significance of a well-structured fund and the impact it has on long-term success. A holistic approach. Successfully structuring a CRE fund requires a holistic approach that aligns strategic objectives with legal, financial, and operational components. It involves striking a delicate balance between risk and return, investor interests, and regulatory compliance. Importance of legal structures. Selecting the appropriate legal structure for your fund shapes its governance, taxation, and investor relations. Whether a limited partnership, limited liability company, or other entity, the chosen structure should align with your fund's goals and operational needs. Navigating investor relations. Investor relations are a cornerstone of fund success. Establishing clear communication, transparency, and trust with investors fosters long-lasting relationships. Understanding investor preferences and providing tailored solutions contribute to enhanced investor satisfaction. Strategic fundraising tactics. Fundraising strategies are pivotal in attracting investors and securing capital. Tailoring your approach to target the right audience, leveraging your network, and highlighting your unique value proposition are essential components of successful fundraising. Effective fund management. Once established, managing the fund demands a dynamic blend of expertise, strategy, and adaptability. The right team, clear governance, and robust due diligence practices contribute to identifying valuable investment opportunities and mitigating potential risks. Sustainable growth. As Crestview Capital Holdings progresses through its CRE fund journey, it's imperative to remember that a well-structured fund is a foundation for sustainable growth and success. By consistently adhering to strategic principles and continuously adapting to market trends, the fund can navigate challenges and capitalize on opportunities. In conclusion, Chapter 3 has provided a comprehensive guide to structuring a CRE fund. By embracing the insights presented, Crestview Capital Holdings can embark on its journey with a solid foundation, positioning itself for success in the dynamic and rewarding world of commercial real estate. Key takeaways from Chapter 3. Structuring a commercial real estate fund. Chapter 3 has provided invaluable insights into the intricate process of structuring a commercial real estate (CRE) fund. As Crestview Capital Holdings reflects on the chapter's content, it's essential to internalize the following key points. 1. Strategic alignment. Successful fund structuring begins with aligning your fund's objectives, investment strategy, and risk tolerance. Every decision, from legal structure to fundraising tactics, should serve this overarching strategy. 2. Legal structures matter. The legal structure you choose has profound implications for governance, taxation, and investor relations. Carefully evaluate the pros and cons of different structures to select the one that best suits your fund's needs. 3. Investor relations as a cornerstone. Building strong investor relations is pivotal. Transparency, communication, and tailored solutions contribute to cultivating trust and long-lasting partnerships with investors. 4. Tailored fundraising strategies. Fundraising requires a nuanced approach. Craft a compelling value proposition, leverage your network, and customize your pitch to resonate with potential investors. 5. Effective fund management. A well-structured fund demands an experienced team, clear governance, and robust due diligence practices. These elements are critical for identifying promising investments and mitigating risks. 6. Flexibility and adaptability. The CRE market is dynamic. Be prepared to adapt your strategy, legal structure, and management practices as market trends evolve. 7. Balancing risk and reward. Striking the right balance between risk and return is paramount. Your investment strategy, legal structure, and investor relations should all reflect this equilibrium. 8. Investor-centric approach. Tailor your fund's structure and practices to meet the needs and expectations of your investors. Remember that their satisfaction is key to fund longevity. 9. Consistent learning. The process of structuring a CRE fund is a learning experience. Continuously seek industry knowledge, professional insights, and feedback to refine your fund's structure and practices. 10. Holistic vision. View your fund structuring journey as a holistic endeavor. The legal, financial, and operational components are interconnected and should harmonize to achieve success. As Crestview Capital Holdings moves forward, these key takeaways serve as guiding principles. By embracing these lessons and applying them effectively, the fund can navigate the complexities of CRE fund structuring with confidence and competence.